Hey, good afternoon, traders. This is Trader Tim from EminiMind, and it is the 21st of March. We're going to be talking today about relative strength and weakness. I wanted to do a trade recap of the 15-minute breakout trades from last week, along with today's halfway back trades. So let's just jump right in. Taking a look first at the bigger picture, ES has moved up to the 50% retracement here, the full halfway back short. So I'm going to put a put hedge position on here at the close. We got about 45-ish more minutes. I'll put that on kind of as close to the close as possible, maybe 5 minutes before. And I'll just use next Friday as the expiration in the hopes that we can get a quick move down and we don't linger too much sideways here. If I buy too far out, then you're paying a lot more for time. If we do move up here, let's say we just kind of put in a bull flag and move sideways, and then we move higher, I'll just close them out. There's a handful of charts I want to look at here. Let's start with the SPY. Also, at the 50% retracement, just like the ES. But if we look at where we're at in relation to that 50% across all four indices, so S&P right at the 50% retracement. But then if we look at the Dow, also at the 50% retracement, but its down trend line has not been broken. If we flip back to the SPY here and just kind of draw a downtrend line connecting some of these highs, whether you use the high here or ignore that and just kind of draw it down like this, that's the way I had it drawn, a clear break of the downtrend line. If we go over to the Nasdaq, same thing. We can kind of start from these highs, connect a whole bunch of the highs on the way down, a clear break of the downtrend line. But look how far we are from the halfway back, the same high to low, full halfway back that the S&P and the Dow is at its 50%. Nasdaq still has a ways to go. So you would say the Nasdaq is relatively weak relative to the S&P and the Dow. And then the third one, the Russell, I actually have a lower halfway back drawn because we are nowhere near the full halfway back. Russell has definitely been the lagger of the bunch. If we just kind of get a rough idea of the full halfway back, way up here at 216, and we're trading down here at 204. So in terms of relative strength and weakness, the Russell and the Nasdaq are the weaker two. S&P and the Dow are the stronger two. But everything trading either at its 50% or in the case of the Nasdaq underneath its 50%. So buying puts, I would look to do that in the Qs because they're relatively weak. The other chart I wanted to look at here before we get into the trade recap portion is the VIX. And I had this uptrend line drawn before we even came down and touched over here. And so now seeing the bounce at this uptrend line, that gives another sort of confirmation that if we move above today's candle's high tomorrow, we could definitely see a rollover. And if we go back to the S&P, also notice we poked above yesterday's high today. And that, if we can close with this kind of spinning top shaped candle, it makes a very strong entry candle because you have a clear break below today's low and a clear stop above today's high if we were to break it tomorrow. Keeping on the theme of relative strength and weakness, the Russell has actually broken yesterday's low, Friday's low, but then the Dow, come on. The Dow kind of same thing as the S&P, broke the high but hasn't broke yesterday's low. And then lastly, the Nasdaq. Same thing, broke the high, has not broken yesterday's low. So when you're looking at relative strength and weakness, whether you're looking at an individual stock, I like to relate an individual stock to the S&P. Are we looking stronger or weaker than where the S&P is at. And if you're looking at the top four, indices, S&P, Dow, Nasdaq, and Russell, where are they at in relation to each other? Is one stronger than the other? Is it relatively stronger, or is it relatively weaker? And so if you're looking to go long or short, you want to buy the relatively strong one and sell the relatively weak one. Let's jump into last week's 15-minute trades, and then we'll go through today's halfway back at the very end. So going to the 15-minute chart, last week we'll start with the Monday. And one of the reasons I wanted to go through these is because there's some instances where I'm taking the 15-minute play and some instances where I am not. And oh, but one more thing before we get in here. I remembered it because we're on the 24 hours worth of data here. Wanted to pull up the Bitcoin and Ether charts because we've been highlighting them each week. I'm waiting for, in Bitcoin, we should be able to make it up here to this 44,000 area. You could come in and draw a smaller trend line here and say that we've broke the down trend here, but in reality, we've been in this triangle for a couple of months now, and so these are the two trend lines that I'm using to kind of form this ascending triangle. So looking for a move up to 44,000 in Bitcoin. If we dip first, I would just want to make sure that we don't break this prior swing low. And then the last one, and we'll get to our intraday chart, Ethereum starting to break above its down trend line here. Pretty convincingly. We do have a swing low, if I zoom in a little bit, a swing high, excuse me, back here, as well as this one would kind of be the real solid confirmation. If we can break above, we'll call it a 30.55 in ETH, then we should be able to at least make it up to the full halfway back, which would look something like that. All right, let's talk intraday. So 15-minute chart, talking about the opening breakout on the first 15-minute bar. So we'll go back to last Monday. We'll just run through the week really quick. I got my log pulled up here, and we can just run through. So the days I'm not taking this setup are when we fill the gap of the prior day. So dotted line is the start of the new day here. This is the first 15-minute candle. This guy right here, and you can see in that first 15 minutes, we traded at the close of the prior day. So I did not take it on Monday. We ended up actually, it looks like it's a clean break, but actually in here, we dipped. I can maybe show you here on the 512 tick chart. So would have ended up being a stop out anyways, and so that's why I don't take them when we fill the gap. On days when we do fill the gap, we tend to have more halfway back opportunities because there's more chop. And on days where we gap and go, there's less halfway back opportunities. So that's why it's a nice pairing for the halfway back trades that we're already taking every day. So the 15-minute, link these up. I'll show you where it broke. It was actually the third bar that it broke, and that would be okay, but we did fill the gap, so that's why I didn't take it. But see how we poked above briefly, and it came down like 10 points and would have easily stopped you out before going higher. So saved a -4 there. On Tuesday, we did have an entry. We gapped up, and it traded here. And then I just trailed my stop. This one didn't end up going super strong to the upside. I just got a couple of points out of that. I trailed my stop below this candle's low at 42.11 and a quarter. So that one went up for, switch charts, just about 3 points. Wednesday, no trade. It was a Fed meeting announcement, so I never trade those mornings. Didn't really do anything. Would have been just chopping around, would have stopped you out anyways. So save that one. Thursday was a nice one. We broke above the first 15-minute bar. And notice this is where the gap fills way up here. So we did not trade at that gap fill in the first 15 minutes. So trades a go. And it traded up What I've been doing is instead of, well, I guess think of it like almost like a sandwich. I'm setting a 20-point target on these trades with a 4-point stop. And at the same time, I'm trailing my stop under each candle. So that way I can reduce the risk as it's working its way towards 20 points. But as of late, in the last couple of months, we have been ripping so fast. Like this second candle is 18.5 points. So there are times where the market will rip, 22, 23 points and then roll back over. And so rather than letting it come all the way back down, stop me out for break even, being able to take it off at 20 points is fantastic reward to risk, and that's what happened in this trade. Had you just trailed your stop, you could have been out under the third candle, 43.52.75, just one tick below. So that would what was a 39.25 was the entry. And so that would have been, just shy of 20 points. But I've found that if I can take the 20-point profit and just get out, that it is actually a little bit more, gives you a little bit better returns than trailing each candle and risking it coming back down, especially in the last couple of months environment. So that was Friday's trade, and then this morning we filled the gap. Nope, actually, wait a minute here. That was Thursday. Friday we filled the gap. Yeah, so Friday we filled the gap, and it just kind of ended up breaking a little bit and then moving back down. And so you can see like the pattern when we fill the gap, it's a lot choppier. There's not as much gap and go. It was also an expiration, quadruple witching. Those days can be a little bit messy, if you will. So I typically don't trade those days as well. This morning we also filled the gap, and it is a little bit rare to fill the gap so many times in the last 6 trading days. We filled 3 of the last 6, so 50%. So that's a little bit more than usual, but not a huge deal. So one thing that I like to do is if we fill the gap, then it's kind of okay. Let's pay closely attention to the halfway backs because there's a better chance we'll be more range bound on the day. So that brings us to today. And let's go to today's halfway back. Go to the morning. And I'm going to flip it to a 5-minute chart just so we have a little bit more data in the mix here. And get to my other log. So today ended up being a really good morning. First thing I like to do is, ask myself where are we opening in relation to the prior day's range? Pretty close to it, so likely going to be able to fill that gap really quickly. We did, and then I'll go ahead, give it 15 minutes, let things settle out a little bit, wait till we get a high and low that I can draw an anchor point to. So the first one was a halfway back long. So we're just going to draw from the low of the day to the high of the day. And that one did not stop at its 50%. And so by drawing it up on the 5-minute, not taking it as a limit order, but just drawing that up and using it as a potential support level, is there support there? Well, if there was, had we bounced here, then I would take a retracement, but I would take it on the 512. So let the 5-minute, let it stop there if it's going to, let it show its support, and then take it on the 512 tick chart. Last week, I mentioned in one of the live trading sessions this kind of crossover trade, and so it ended up being the first trade today, and I wanted to highlight it here. So the way that it works is when you break a 5-minute halfway back like this, you can draw from the swing high before. In this case, it doesn't really matter. These two highs are really close, so whether you want to use this as the high or this as the high, doesn't really matter. But grab from the swing high prior and then go down to the swing low after. And again, this one broke the 61.8 by just barely 2 ticks. So if you go a little bit lower here, and again, it doesn't matter if you're using this as your swing high to lows. But that's what I kind of consider the crossover So this is a short after the halfway back long failed. And then in conjunction with this short, it was 6:50, so 20 minutes after the bell. If we come over to the NYSE ticks, we can see the NYSE ticks were moving down, down, down. Our high tick for the day was up here, but the zero line was really hadn't spent much time there at all. And we got this pop, this spike in the NYSE tick right here at the same time that the halfway back short traded. So, I want to be selling at halfway backs in high ticks and buying halfway backs in low ticks. So we had a little spike at the NYSE tick at the same time we were trading at the 50% short. So that made for a really nice short because it sold off very quickly, and we made our way back down and then through lows. So this one, if you draw the next 50% retracement, this one happened really fast. This was like 2 minutes, this little sell-off here. So you could start by drawing the next 50% retracement, and then we didn't even bounce anywhere close to the 50%. So just coming in and trailing the swing high, one tick above the swing high here is what I did, and then I got taken out just above this candle's high here at 51, 44.51. The next one, and so that was the 3-point first target, and then 10 and a half points on the second contract. So a nice, really hard, quick drop. And you might be saying, okay, well, isn't that in the middle of the range? When we're this early in the day and the range hasn't really been established, like we're within the first 30 minutes, so we don't have the high or the low of the first 30-minute range to mark yet, I'm okay taking a trade. It could be like a low ticket lows or a high ticket highs because we don't know if there's a tick divergence yet. We don't know if it's range bound or a trending situation. So the first 30 minutes, you sometimes you just have to place a trade in order to get some more actionable information that you can continue trading off of. The next one was 40 minutes after the bell, and at this point we did have the high and low of the first 30 minutes. So the high being the high of the day, and then the low of the first 30 minutes was here. And so we came down, we kind of bounced off the first 30-minute low here once, twice, 3 times, and then broke below it. If you drew it up like this as a short, it didn't fill. You could have used the lower high here and come in like this and take a short below the low of the first 30-minute range. That would have got you a fill. I ended up drawing a little bit bigger retracement, so I drew it like this from this kind of swing high that is a little bit more prominent to the swing low here. And it was also visible on the 5-minute chart. So this is, I wouldn't really call this a micro. It's more of just a little bit larger halfway back. But the distance between the 50 and the 61, when you put your order in and your stop goes out, is still within 2 points. So it is a valid entry. And then again, the 710 where it traded, if we come over to the NYSE ticks and see what that was doing at the time, what do you know? We made a new high tick for the day. And that's a great sign. We're not at the high price of the day. We're making a new high tick, and we're down here at a resistance point. Great opportunity to kind of confirm the entry short. So this one came down, got the first target. We didn't break the swing low. And so this is a little nuance that when we break the swing low, that's when I will start trailing my stop. But in this case, the trade is a little bit bigger because the anchor points are a little bigger. So we got the first target really quickly, but then I left my stop alone. And you can see we kind of came up. We didn't trade at the 50% exactly again, but we did, return a handful of points and before we rolled over a second time. And that's when, so then we came down and broke the swing low down here. And that's when I started trailing my stop down. Again, starting by trailing the next 61.8, and I begin to trail when we break this swing low back here, and then trailing the next swing low ended up being here at 44.40.50, and that's where I was stopped out of that one. So that was a 3-point first target, and then five and a quarter on the second half of the position. So two pretty quick moving trades, but you got to have a little bit of patience at the start of the trade. Maybe not that first one, that moved pretty quick, but most of the time the ES is going to be, you know, you're rewarded if you're patient at the start of the trade, and then once it gets going and it gets away from your entry, then it's pretty easy to just, trail your stop.